Awesome. I think we can get started here. Welcome, everyone. Glad you could join us today for our 1 hour webinar, Fight AP Payment Fraud with the Right Controls. I'm Sam Maxwell, part of the marketing team here at MHC, and I'll be facilitating today's discussion. Our speaker today is Lynn Larson, who I'll be introducing shortly. First, just going over some housekeeping items for everyone. This webinar is being recorded, and attendees will receive a follow-up email with the link to the recording on our website. All participants are muted to prevent background noise, so please type in any questions you might have into the Q&A section. There will also be a post-webinar survey that will appear when this webinar ends. Please use that survey to let us know how we're doing and to request any additional information so an MHC resource can follow up with you. We really appreciate that feedback. Awesome. Lynn, could you kick it over to the next slide? Great. I think there's a couple of transitions in there. Perfect. Two more, I think. Yep. Awesome. Cool. So for those of you not familiar with MHC, we help organizations tackle digital transformation with speed and confidence using our solutions to automate the capture, transformation, and communication of paper and digital documents across core business processes. Our flexible end-to-end automation platform helps users eliminate tedious procure-to-pay and order-to-cash tasks, increase efficiency, achieve operational excellence goals, and strengthen relationships with customers and vendors. Awesome. Next slide, please. Great. And like I said, with us today is our speaker, Lynn Larson. Next slide so I can read that bio. Great. So just a little bit about Lynn. She's had more than 20 years of B2B payment experience. She is part of certified purchasing card professionals since June 2007. And then in 2014, she established Recharge Education, which offers training, consulting, and customized resources focused on payment strategies, as well as free educational blogs and other online content. So definitely give that a check at that link you can see there on the screen. Awesome. So Lynn, without further ado.
Okay, great. Thanks, Sam. And welcome, everyone. This is obviously a very important topic, and I'm happy to see so many people join us today. And I think what I'll do just to minimize distractions, I'll turn off my video during the slide presentation, but then I'll turn it back toward the end. And then I know Sam is going to keep track of any chat or Q&A questions that come in. So we'll just get started. As shown here, we can see that I'm going to start with types of AP payment frauds. I'm actually sharing more than one example. So I've got one coming up as well as some red flags and some other things to watch for. And of course, the focus is some controls that you can be doing even starting today. So not all controls have to be complex. Some are very simple and get you on your way. So with that, let's start by looking at the frauds. And I know I do have to say right from the beginning, and Sam, maybe it's a question you can pose at the very end today, but when he and I were talking the other day, I said, the majority of attendees at these types of events are the people who are doing things correctly today, and they usually just join to make sure they're on the right path. Unfortunately, some organizations simply don't want to focus on controls at this point. They sort of leave it up to chance. They don't want to spend the time and energy on fraud prevention. But then what can happen? Then they're caught off guard, and any sort of fraud or data breach ends up being, a very expensive, very time-consuming endeavor. So I'm just happy you're all here, no matter what boat you fall in, whether it's the ones who are already prepared or you're just getting started. So, okay, types of frauds. I mean, we know frauds can come from anywhere. Sometimes it's employees and suppliers who are even working together. We'll talk more about that. And, when we look at internal fraud in a moment too, it's a misconception to think that only new employees commit fraud. Time and again, through studies, through news stories, we see that longtime trusted employees are also very likely, when you look at the perpetrators, they're often the ones who are committing the fraud. So it's all ages, all job levels, doesn't matter about years of service, doesn't matter if you're new, if you're not new to the organization. And, I have to say too, if an employee is found guilty of some type of internal fraud, chances are they're also guilty of something else. And I've got an example of that coming up as well. And besides fraud, you might often hear other terms. It could be something like misuse, abuse. It could be an inappropriate purchase, a policy violation, and those are obviously not good at either. Fraud can come in all forms, but what we're really focused on today is the actual fraud coming from different sources, whether it's internal, external, what they may look like. And we'll sort of just set aside policy violations, things like, HR, spent several $100s buying some plants to decorate their department. That might not be allowed, but that's not what we're going to focus on today. So before we get going any deeper, Sam, do you want to launch that first poll? Because I'm just curious what the audience experience is. Okay, so in the past 2 years, I had to narrow it down. What type of AP fraud, whether it was an attempt or actual, has your organization experienced? And I'm really referring to any type of payment-related fraud. So it doesn't have to just be accounts payable, but just anything where you have been a target for some kind of monetary fraud. And Sam, I'll just let you control that when you think the majority have responded.
Great. The results are now shared with everyone, Lynn. So if you want to read those back for everyone.
Oh, sure. Okay. So, all right. The top answer was fraud. I'm sorry, I'm reading ahead and I'm getting like, oh, this is interesting. Fraud from an external source is the majority. That's 46%, so about half. Both internal and external, that's 21%. About almost 30% said not sure. And I can see that too, especially if you haven't been around your organization or you're just not, privy to things that have maybe happened behind the scenes. Internal fraud, 4%. So I would say, many organizations spend so much time and energy focusing on the external fraud threats that they forget about, the internal fraud threats, which can happen just as often, if not even more so. But if you're only looking one direction, you can miss what might be happening right in-house. So before we get too much into that, let's start with the external fraud. And here are some examples, and it's certainly not a complete list. And as you can already figure out here by looking at these, they mostly overlap. I mean, you could have, business email compromises, BEC, that's a big one that we continuously hear about. And those often result in things like, a bank account change or payment related change requests, or a BEC might have to do with phony invoices. So there's a lot of overlap going on here. But I had looked at the report put out by the Association of Financial Professionals, and that, is showing that BEC continues to be prevalent. And I think we all know that. And it's the primary source of payments fraud at over half of the organizations. And there are even things like, a product might be shipped to a company that the company never ordered. It might be from a vendor that the company had never even done business with. And then that, fake shipment or that, unordered thing that arrives, then they start getting invoices related to that and demands to pay. So, that's just one example that kind of relates to all of this, but I don't have it specifically named here. But just for a moment, let's talk more about the BEC, the business email compromise, because it could be resulting in things like extortion, that, hey, they want the organization to pay or do something. Otherwise, great harm will come upon the organization. It could be a BEC that impersonates an internal employee who is asking to have their payroll moved or redirected to a different bank account. That is probably more in the HR realm, less so accounts payable, but that's just one version. I think if you work in an accounts payable function, you know that these BEC, these emails tend to relate to bogus invoicing. They are trying to get, bottom line, they're trying to get the organization to direct money their way meaning the fraudster's way. And it specifically is targeting people. And in fact, if anyone is familiar with the Verizon Data Breach Investigations Report, they do, I think it's every few years that they put this out. It's an interesting report, one just in the style in which it's written. But I was just looking at that about a week ago, and it shows that 74% of all data breaches involve a human element. And I think that's where we all know a lot of weaknesses, happen is just, through people that are trying to be helpful, that want to make a good impression. And one example of that even is the gift card scam. And perhaps all of you already know what that is, but in case you don't, that is where a fraudster has gotten into an email system. They're impersonating someone, usually from the C-suite, and they are asking, perhaps it's an accounts payable clerk. They're saying, hey, we want to, give away these gift cards as an employee appreciation or some other type of event. And they direct the employee to go out and get a bunch of gift cards, rub off, that kind of gray covering on the back to expose the number and the PIN, and then email it back in response so they can get going with this. And we know, of course, it's fake, but I personally have known two different organizations where an employee fell for this because they had a person that was so eager to please, and they see a request from the C-suite and they just jump right on it. And so these things can and do happen, even though to us, perhaps they sound really crazy, but they can and do happen. Phishing, is one that can happen in email form. It might even happen over the phone. And I think back, let's even go back several years where someone might have thought, oh, well, I have the ability to recognize a phony email. I know that they'll start with something crazy like, dear madam, we sorry for the interruption, and we just need a moment of your time. Those emails that sound overly formal, they don't use the same language that we use in our business environments, or perhaps they have misspelled words or they have incorrect grammar. Those are pretty easy to spot. But in this day and age with artificial intelligence, AI, these fraudsters have gotten very good at making emails that look very legitimate. They've cleaned up the spelling, they've cleaned up the language, and now it's much harder to identify, phony emails. And so that's one thing to be aware of. There also could be vendors who are knowingly sending duplicate invoices. That's part of the phony invoices that might happen. So from a legitimate vendor, not really an unknown fraudster, but some vendor knowingly sending more than one copy of the same invoice, hoping that it will get paid twice. And then good luck, getting your money back if that's what happens. I think we all know the risks associated with checks being stolen or tampered with. And just in case, we're wondering, does this really still happen? Let me actually move to the next slide. That report that I mentioned, the Association of Financial Professionals, they just came out with their latest payments fraud and control report. And they're still showing that checks are indeed the top fraud target. And, so if you think, oh, well, we don't have to worry about anything because we're not doing a lot of checks. Well, then look at ACH, there's fraud on the rise. And specifically in that case, I would say it's more the report shows it's more the ACH debits that can become a problem versus the credits. We know that wires, while the fraud has decreased, according to this report, they are still a big target. And some things really, too, to watch out for when we are talking still about those external frauds, anything that is, marked as a rush, they want to catch your accounts payable team off guard. They want things to sound urgent. They want to make it sound like if the person doesn't comply with the request, they might get, reprimanded internally. So again, a lot of it just appeals to our humanity. whether we're just trying to meet a need, respond to a request that we think is legitimate. But overall, we can't let our guards down on any type of payment method. Fraud, via checks, while it has, gone down, it's still the top target, as I mentioned. And, you really have to just make sure you've got the right controls, no matter your payment strategy. And we'll talk more about that too as we get into the slides here. But I also really want to get into the internal aspect, because I think, again, sometimes we are overly comfortable feeling good about our protections with external threats. We don't pay as much attention internally. And again, with this slide, with internal fraud examples, certainly we might have overlapping ones here. You still have the potential for check theft or tampering, and I'm going to share an example in a minute. Colluding with suppliers. It could be you're dealing in accounts payable with employees who are falsifying expense reports of some kind, and I've got some examples, so bear with me here. That there is a possibility for invoices to be altered. Maybe someone's setting up fake vendors, or if you have cards issued to employees, they might be using those for personal gain. So let me go back for a moment to the colluding with suppliers, because we had already mentioned that earlier on. There was an example in the news not long ago where the Southeastern Pennsylvania Transportation Authority, that's known as SEPTA acronym, it was several different employees who had participated in this whole scheme to defraud their employer of nearly $1 million. It was, you can look it up. I mean, it was absolutely crazy. And, they used, let me tell you about one of the employees. Many were involved, but one of the employees had solicited a couple different vendors. They were getting the vendors to provide them, the employee, with cash payments. And it was like $1,000 to $2,000 every month. And in exchange for the employee getting the payments, then he said to the vendors, well, falsely bill us. And in this case, they were using a purchasing card or P card system, but it could easily happen through any sort of AP accounts payable system as well. But the vendors were billing for things that they hadn't even provided to SEPTA. And, there was also the incentive to the vendors where, they were getting some money, the employee was getting some money. And that's just one example. And it went on for years. So that can happen. And so we're going to talk, at the end about all sorts of different controls that you can put in place to try to, whether it's prevent this or certainly detect it before it goes on and on. I think one of these reports have shown that the average fraud goes on for, I think it's roughly a year before it's ever caught. So we know that fraud can happen even with, very strong control environments. It still can happen, but then, it's really critical to have the right detection methods in place so you can take care of it and take, the right actions to hopefully prevent monetary losses to your organization. And then I mentioned, earlier too, how if you catch an employee who has committed one fraud, chances are they are doing additional frauds as well. So let me give you an example of that. This was coming out of a healthcare organization where there was a vice president who had stolen or managed to get nearly $800,000 over a multiple year period. And, the scary part was this one happened to go on for longer than 10 years. And by the time they discovered what was happening there in that particular state, there was already a statute of limitations, and they couldn't even go back as far as the origins of the fraud. But what this vice president was doing, one of the biggest things was submitting false mileage reports to accounts payable. And, it started out, I suppose, innocently enough, but at one point, accounts payable noticed that this employee was either number one or number two in terms of having the most mileage expense, requests. And they suggested to him, hey, why don't you take a company vehicle? That's what they're there for. And the employee refused. And, you could say that certainly was a red flag. So that went on. He kept getting reimbursed for miles that he was not doing for business. And then another piece to his fraud, he had a card issued to him that he was using for personal purchases, and certainly that can happen. But again, detection is critical. But then the other piece of this, specifically was targeting accounts payable. He was submitting reimbursement requests saying that he had paid a certain printing company. And I believe he had copies of the checks that he supposedly sent to this printing company. And it was thousands of dollars. And he was getting reimbursed for paying this printing company for years. Again, this was a very, long fraud going on. But it was discovered later that the printing vendor had gone out of business years earlier. And so this is, sort of the moral of this particular story is you don't want your employees paying vendors for things that should go on a purchase order or things that should be, paid directly by accounts payable. So there was no reason why this person as an employee should have been writing personal checks to a vendor for printing services. So that's the sneak peek into controls that you want to have in place. You don't want to allow things like that. So, again, these are all examples, and I'm sure maybe people on the phone here today have examples of other things. But given all the types of internal fraud that can happen, again, it goes to say that you have to look in each avenue of your policies, your procedures, and to make sure you've got controls in place. So with that, I'm going to get into a specific example, another specific example that actually involved an accounts payable employee. So in looking at this one, it involved a supervisor in accounts payable, and over about a year and a half's time, she stole about $160,000. She used approximately 70 checks, and most of these checks were written out to fake vendors. So that goes back to the prior slide about setting up fake vendors that she had created. So she was in that position, supervisor in accounts payable. She was able to set up these fake vendors. She was then able to create checks to these vendors, which of course went into her pocket. And then in addition, she was also taking checks that were made out to legitimate vendors of the organization, and she was cashing those. And so when those vendors inquired about late payments or missing payments, then she would just cut duplicate checks to pay them. And the organization, again, wasn't aware that this was happening. They were alerted by their bank, actually, because the bank had noticed checks from the organization were being deposited into this person's personal account. And the more they dug into it, of course, an investigation ensued. They realized that she was dealing with some financial difficulties in her personal life. And I believe her family members were as well. So she was also funding or giving some funds to them. So that really gets at what went wrong there. What were the control gaps? And of course, as I'm sharing all these things, I'm sure your mind can already go to the place of, oh, well, okay, you just have to turn these around. If you have lack of separation of duties, we know the answer is to make sure you have separation of duties. But in this particular case, if she was able to, set up new vendors, it appears nobody was paying attention. She was able to cut the checks, including duplicate checks. I mean, she just had control to do all sorts of things on her own. And I would assume from reading this news story that nobody ever was paying attention to what she was doing. And again, that might have been a case of where an organization just said, oh, well, we trust our employees and we don't have to worry about anything happening internally. And you couldn't be further from the truth there. You might have great employees and this may never happen to your organization, but that doesn't mean you should just, not implement controls because you just think it won't happen to you. I don't think there was any vetting of the vendors here. Again, she set up fake vendors, and how did these fake vendors get all set up in their master vendor file? I have to assume there was no usage of that service, positive pay, or specifically payee name positive pay. Again, I assume that most of your organizations are using this today, but if you're not aware, positive pay is that service offered by most banks. And as part of it, companies would transmit to their banks like a check issuance file each time checks are written. And the file contains a list of check numbers, dollar amounts, so that when a check is presented for payment, it's matched against the file. So if there's a match, no problem, the check, gets processed. If there's no match, the check is handled, according to whatever exception process that the company has devised. And so when you move kind of up a step in the service to the payee name positive pay aspect, that is enhanced, where it includes, besides the check number and amount, the name of the payee. So if you're not using this today, I mean, certainly, I really recommend that you go down this path. And many times the service is complimentary, just depends on your bank and the type of activity you have with your bank. But in terms of, vetting of vendors, then you could say, this begs the question, well, how do you vet vendors? How do you know they're legitimate? Well, and we're going to get more into the controls later, but, certainly you want to be doing your due diligence prior to adding a vendor to your master vendor file. It might involve verifying a business's legal name, their legal address. You might want to see if they're registered with the Secretary of State in the state where that vendor originates. You might want to do some type of business background check. You might want to be verifying, if you can. I mean, some of these things are a little challenging, but verify if you can if any employees work for that vendor entity. You probably don't want to be sending payments off, if you're talking checks here, like in this story, to purchase a PO box, a postal office box. So there's a lot of different things you can do, but you do have to have things in place. And again, we'll look back on that. My only last thing we'll look at that in a moment. My only other thing to say in this story, where I have the bullet point about not the best payment method, if you do the math and take that $160,000 that this employee basically stole, divide it by the roughly 70 checks it involved, it comes down to small dollar amounts, something that maybe could have gone onto a purchasing card and not even have been part of the AP payment process. So I don't know, you can, have opinions on that, but, she really did this in a under the radar sort of method. It wasn't just big dollar amounts that might have caused alarm. It was subtle, but it added up over time. Okay, Sam, so that leads to our next poll, if you want to do that one. Because we've been talking about vendors now. So what is the primary way that vendor data gets added or updated in your AP systems? And, this could be, a big thing. We'll talk, of course, about all of these things as we get deeper into it. So is it manual? Someone has to manually add them. Do you have vendors doing the step by going to a designated portal? Do you have some other type of electronic process? Maybe you're not sure. So Sam wants most people, and I'm going to, okay.
Great, yeah, these are shared out now.
Okay. All right. So 84% of you are saying you've got manual data entry, whether it's by accounts payable or a related department. Only 5% said that vendors use a self-service portal to manage their own information. 11% noted other electronic process. So I think, if you're doing it manually, like 84% of you, this might be a big area to take a look at in terms of, do you have the right controls? And, we're going to get into what some of that means as well. But I want to continue on with not only the check example that I just shared, but what else can potentially increase the risk of fraud within your accounts payable area. I alluded to this, but I'll say it, explicitly now. Relying on trust And you could argue that relying on trust belongs in the inactions column, but I put it in the actions because somewhere, somehow, there was a management level person who decided that you didn't need to do anything else because you trust your employees. And I first heard there's a hashtag, trust is not a control. I first heard that hashtag from Kelly Paxton. She's a certified fraud examiner. And I thought that's classic. That's absolutely right. You cannot rely on trust as a control. So anyway, you have that. And you've got, if you allow a rubber stamp signature or a wet signature, people signing off on things, and you might think, well, what's wrong with that? Well, just even in the last few months, I've been reading fraud stories. This is what I do for fun. I was reading fraud stories that involved either a rubber stamp or a wet signature. I have had organizations say to me that, accounts payable keeps a copy of all the managers' signatures. And so when those managers sign off their approval on an invoice to be paid, clearly they're doing everything manually, that they don't have automation, then accounts payable is expected to pull out that list of signatures and try to compare. One, that's inefficient. Two, it would change so often if you do have turnover of employees. But then three, signatures can still be forged. So I bet people on the event here today, as attendees, you're thinking, yeah, that's not a good idea. But even a rubber stamp, I have seriously seen stories where there is a rubber stamp of someone's signature. And of course, some employee, whether it's an administrative assistant, some other person, has used that to commit fraud against their organization. So you don't want to be doing that. You don't want to be giving full system access to anyone. So take that check fraud example as one story to bring to your management and talk about. I realize, though, that many of your organizations might be quite small, and you might say, we don't have enough people to have all the separation of duties, that you're talking about, Lynn. Well, then I would say you really have got to involve the appropriate oversight. And when I say that, I'm talking about someone or some team, maybe it's a board of directors, that has at least one functional job level higher than the person who is making the payments or approving of an invoice. So you have to have those checks and balances. You cannot just say to somebody, take it and run. You can set up vendors, you can pay vendors, you can cut checks. And I've seen organizations that are very careful in how they arrange their access for accounts payable, but then they might give one or more executive C-suite people full access. And again, that sort of just gets rid of the control. I mean, if anybody has full access, that can be a potential problem and open the door to fraud. Now, on the inaction side, it's when you've got some of these control gaps and you don't do anything. It could mean that you have a lack of procedures. It could be that you, whether you have some reports available to you or you don't have reports, but you're not utilizing information that can help you identify potential issues. Or when you go back to, for example, that payee name positive pay service, if you're not taking advantage of things like that, whether it's from your bank or from a technology solution, AP automation, if you're not taking advantage of what those things offer, then that would be another inaction that can increase risk. So at this point, I'm not sure, again, we usually have good attendees that are already doing all these different things. That is, you're not doing the risky things, but just as you're going, sitting here today, as I'm going through this, take, a few notes over where do you think your problem areas are? And that would be what to, after the webinar, go and take to your management saying, hey, we've got a couple issues here. So then when you start to look at occupational fraud some more, now I'm referring to a report that is done. It's fascinating, actually. It's called the Report to the Nations. If you haven't heard of it, it is done by the Association of Certified Fraud Examiners, ACFE. They just have a wealth of information. And, according, as you can see here on this slide, the top 3 flags that were displayed by perpetrators, that is, employees that are committing internal fraud, are things like living beyond their means, financial difficulties. To me, they kind of go hand in hand. Or even unusually close association with a vendor or a customer. Now, I think it's hard to question if someone's living beyond their means, because I don't think an employer necessarily knows the details of an employee's financial status. Yet, if someone is truly, flaunting great wealth that is unheard of, amongst any average person working a job, you might want to start to think twice. And again, these are red flags, but it doesn't mean someone is committing fraud, but it should give you some, pause, make you question it, maybe ensure you're keeping a closer eye on someone if they meet any of these. And of course, the report itself went on and had, I think there were at least 8 different things that were coming out, the 8 most common red flags. There's even more. But this was the report that said that the typical fraud case lasts 12 months before detection, and the median loss is $117,000. So then, I go back to organizations that don't want to take actions today in terms of setting and establishing strong controls because they just don't want to spend the time. Well, then how much time would it take you to deal with a median loss of $117,000? You get the trade-offs. It really boils down to how much risk does your organization want to take? But that last one for a minute, I have to say, I know of a friend of mine works at a company where there's this employee who keeps accepting some kind of lavish gifts from vendors, and the company isn't aware of it. It's like it's being found after the fact. That would be, in my mind, a person to watch. If a vendor is giving one of your employees, really expensive gifts and things like that, that can create that unusually close relationship, and it could lead to something like that example I shared earlier about SEPTA and that collusion between employees and vendors. So that's a great report to look at. Other things, potential operational red flags. So things not really related to the employee themselves, but what's going on in your organization. If in accounts payable, you're starting to see budget issues in any particular department or the organization overall. I always encourage companies to really keep track over spend, one year to the next, and not just year to year, but look at months. You might have higher spend at the end of the year as people use their budget dollars, but you need to be able to at least look at data today to say, is this our typical pattern, or is something out of the ordinary that we need to research further? Going back to even that check fraud story that I mentioned, if you've got vendors who are saying you haven't paid me yet, it's late, it's missing, that would be another, red flag, not related to a particular person, but to something maybe strange going on. Back to the vendor vetting bullet point I brought up. Again, if you are starting to see some unusual vendors, or maybe vendors have been added to your system, there's a flurry of them, or you've got a new vendor and spend skyrockets, it's just worth looking into. Again, like personal red flags, it doesn't mean that fraud is happening, but these are the things that might warrant additional digging into. We all know that there are employees, when they're requesting reimbursement, they might not have the right receipts or the right detail on a receipt. That can be another red flag when you just have this receipt problem going on. And I always say, when you're doing any auditing, you have to occasionally look at whether the goods can be located. And there's a story that I read some years back where there had been, I think it was a principal of an elementary school who supposedly was buying iPads or tablets, for students for the classrooms. And that sounded legitimate, but then, lo and behold, they never could find them. And eventually that principal was found to be committing internal fraud. So there are times where you want to just be verifying, are these goods here? And then if you just start running into a lot of exceptions, you've got rush check requests, you've got employees who have a bunch of missing, whatever it is, a bunch of missing receipts. When you start seeing a bunch of exceptions, that should also kind of raise your eyebrows and make you think twice over what's happening. So what can we do now? I've alluded to things, but let's get into what we can do now. First, I have AP-centric actions. And what I mean by that is, what can accounts payable do now that doesn't really involve, say, HR? It doesn't really involve a big management decision at the top organization level. Within accounts payable, we talked about this. You want to make sure you are doing that separation or segregation of duties. And again, if you think you're too small for that, that doesn't mean don't do anything. That means you really have to rely on a proper oversight. I also recommend doing an annual risk assessment. And when I have been in front of live audiences saying, hey, who does a risk assessment? I don't have a lot of hands that go up. A lot of people just don't think about, well, what does that mean? It boils down to looking at all your different processes, procedures, and identifying where there might be gaps in the controls. And then you take that and you figure out, how do we close those gaps? And then once you do it the first time, then every year you can go back to the previous one, and it makes it a lot easier year to year. I do say you want to clean up your master vendor file, and I'm stressing that because I have done some research for an AP organization where I know from the attendees' responses, cleaning up the master vendor file seldom to never happens unless they're doing a system change or upgrade. But again, this is where you can get into trouble with fake vendors you don't know about, or vendors that were added, without your knowledge. You want to update procedures. You want to note things like, how do you handle policy exceptions? What do you do if there's no purchase order and an invoice is presented for payment? What do you do if an invoice is received outside of your designated channels? So if you've got AP automation, yet a vendor mails you an invoice or even emails it, that's very common. Then what do you do from there? So you want to make sure it's clear that employees are doing what they're supposed to, and they're not just doing one-offs, whether the vendor asked for it or they just didn't want to take the time to do the procedure as outlined. So lots of things you can just start to work on within AP. Going on from there, it is if you are utilizing some kind of AP automation, electronic tools mandate the usage. And that goes along with the exceptions I was just talking about. I know that there are times where a vendor will just go to their favorite AP clerk and say, oh, I just don't want to go and submit my invoice through the portal. Can you just handle it for me? Sure, it might be a fine request, but the more your AP people are going outside of the designated process, then it's opening the door to fraud for when you do get a fraudster that is impersonating a vendor and wants something paid. So, if you can be consistent with your controls, with your automation, it's going to reduce your risk. And then it's things like using a separate dedicated computer for banking activity. And I have heard this one stressed many a times by Mary Schaefer of AP Now. I know she's done some webinars for MHC, but that is just a very cost-effective way to prevent fraud, meaning, compromised emails, viruses, malware, all the things that can happen on computers that are used for anything and everything. So you'd have just a separate computer for the banking. Even I don't do that, and I know I should, but, it's a simple thing you can do. Or what about daily bank account reconciliations? I know organizations that only look at their bank accounts weekly, some even monthly. If you're doing it daily, that can really catch anything that could be a problem. And, I alluded to ACH debits early in the presentation. If you have a vendor that is falsely or wrongly debiting through ACH your account to get paid. And of course, they have to know your bank account number to do that, but it can happen. You only have, I think it's businesses, 48 hours. I'd have to look to verify that, but you only have a finite amount of time to report that to your bank and get some of the consequences avoided. And so all the more reason to do the daily bank account reconciliations. Now, how about checks? If you've got employees, again, this could be a red flag, that are saying, hey, I need a rush check, hand me the check and I'm going to get it to the supplier. Don't do it. You want to be sending checks to the suppliers directly. Don't be giving them to employees who might be involved with some kind of check theft or internal fraud. You don't know. But that can happen. Again, you don't want to do things outside the norm. So update your procedures to minimize the chances of these things happening. Prohibit rush checks. Again, fraudsters, internal and external, know when you're busy. You in accounts payable, you get to month end, you get to certain times of year. And that's really when you're going to likely see the requests for things that are out of the norm. So you just want to stop it right there. Other things, when you start talking about AP automation, that really helps eliminating, that data entry, like of invoice numbers even. I know the poll question had to do with vendor data, but what about invoice numbers? Are you training your AP employees to how to enter numbers if they're still having to enter them manually? Because just a space or a dash or things like that can allow duplicate invoices to slip through systems and get paid twice if they're just slightly different than the original. So many different things that can happen if you don't have the right control. Right control. So you just start to think about what can you make better within AP. Now, here's the big question, because we've talked, earlier a lot about business email compromises. And that you really have to have strong controls when you start hearing from vendors that say, hey, I need to change my bank account, or I need to change the address to where a payment is sent if you're still doing a check. Well, you know what the answer is here. Yes, you absolutely want to verify payment related, changes. And, this is where it can get a little tricky. We know it's more time consuming. We know you're so busy, you don't necessarily want to be, dropping everything and doing this separate verification. But you could be certainly warding off a huge loss of funds. Again, I'm talking about when a vendor, someone posing as the vendor, is requesting a change. You need to have a consistent separate verification. Now, I've had some here's what one company told me about this. They said they always verify changes to bank accounts and addresses using a different form of communication than how the request came in. So they say if it came from an email, that they will call the vendor using a phone number that's listed on an older invoice to that or from that vendor. I've had someone say to me once, well, before we make any changes, we require the vendor to provide the last 3 deposit amounts and dates of the deposits that they would have received from us. And that helps us verify that they are who they say they are. And so just think about how you can make it better. You don't necessarily just want to turn around and start a separate email to the vendor to verify it. Because if that vendor's email was truly hacked, even if you do a separate email, it still could be going to the fraudster. And again, I know phone can be hard sometimes if you've got remote workers, even on the vendor side of things, then they might be using a personal phone to call you. And it's hard, sure, it can become challenging, but it's very necessary to avoid the fraud that can happen from that type of fraud. All right, then we get to the reports side of things, because I think that is something that really can help you control what's going on. You want to be looking obviously at new vendors. So whether it's weekly or monthly, have a report that shows new vendors that were added, or certainly new vendors that were paid. You don't want, things just to slip through the cracks. You want reports showing any vendor changes that were made. We've been talking about that. And then I always tell organizations, no matter the payment method, try to combine all your payment methods and look at vendor spend. And once, not just month to month, but year to date, if you see that one vendor suddenly has whatever the magic number is it 5,000 for the year, 10,000, maybe it warrants a second look. You do want, reporting that talks about or shows employee reimbursements that might have gotten, more oomph behind that VP who is submitting those false requests, if you've got something in writing to show to others. And then 2, system access. This is a big deal that a lot of organizations don't think about. So what I mean here is when you think about your data, start to map out where sensitive data, and I mean, whether it's vendors' bank account information, whether it's an employee's social security number, whatever you might deem as sensitive, and you can, look, to other organizations too, to see what they do, but where is it stored? I mean, go through this exercise. Who has access and why? Is there an audit trail that might show who did what changes? Do you know that Bob did, X change in the system? So then you can at least, be following up on employees' activities. How often, are you looking at that access? Do you have procedures for when access should be terminated, such as employees leaving the organization or changing departments? Do you have security terms and conditions within your contracts with suppliers, or even just your internal policies? Do you have procedures what to do if there's a breach? I mean, there's so much that goes into this. You want to be utilizing reports. I can't tell you, I've asked audiences again during live sessions, like, hey, who gets reports? Most people raise their hand. And then I'll say, okay, who utilizes the reports? And a lot of hands go down. And I've had people say, well, we get the reports, but we just check it off that we got the report and then we put it in a file. And I'm like, well, that's not helping you any. So be sure to utilize the reports that are available to you. So Sam, with that, let's get into the third polling question, because now as I'm harping about access. How often in your organization is access to AP systems reviewed? I'm talking about things like I was just showing on the previous slide. Who has access and the type? And I realize sometimes it doesn't change very quickly, but you do want to be, aware. I see lots of more variety here on this question coming in. And after this, we're going to get into some things you can do, but you have to involve other people. Okay. Did you shut down the poll now, Sam?
Yes, and they're shared out.
Oh, they're shared out. Okay. So monthly or more, that's great. That looks to be, that's not the top answer. Okay. So you got almost a quarter monthly. The top answer is just semi-annually or annually. I would, even say, well, if not monthly, it depends again how much you've got movement and change and how large your organization is. But I think quarterly would be better than annually. It just depends on what other procedures you have for backing that up, such as, is accounts payable notified of employee status changes? Once somebody maybe moves from accounts payable, they might move over to treasury. They don't necessarily need the exact same type of access that they had in AP. And so you would want to change their access, in that way. So it's not just about people leaving your organization, but it's changing jobs within your organization. So anyway, I recommend being very clear on the access. And before I move on and finish up the rest of this, I'll share my own personal story. Back when I was in a finance function and managing a card program, I was getting a file from HR to upload into the purchasing card system of valid employees. And then that would be the control where if I tried to order a card for a non-employee, it would stop me because I'm uploading this file of employees. Well, what I didn't realize until I had done this a few months in a row, the file that HR was giving me had employee social security numbers. And clearly I didn't need that for any reason, but I suppose they just gave me a file that they were using for an internal HR purpose. But that's an example of, I didn't know what type of data I had until I started to poke around. And then certainly I had to go back and say, oh my gosh, where was I storing that electronic file? How many people had access to it? That's kind of an extreme example, but you don't know until you start doing that searching that I was showing on the previous slide. All right, so now when it comes to what else can you do with within accounts payable, here's where you might have to then reach out to others. So in this case, partner with your bank. Maybe you don't know what your liability is exactly. So when we're talking about like the ACH fraud, What are your repercussions? How long are you protected? How soon do you have to report a potential fraudulent transaction in order to not have a monetary loss? So if you don't know some of these things, that's where I just encourage you to talk with your bank about timelines, processes, liability, who does what. And, it's back to what I mentioned earlier too, take advantage of anything they offer that will protect your payments and, close the door on fraud. And then too, the whole, notion of payment strategy. I have done a webinar previously for MHC on this very topic. This is where you want to get into what is the best payment method for different purchase types. And every organization can answer that question differently. But I, at a minimum, encourage you to keep reducing your check usage. And even wires. Do you really need to use wire payments? Some do when you're starting to talk about, large real estate transactions, as an example. But if you're doing a lot of wires today, why would there be another option? Petty cash, that's something I think should be even eliminated in every organization. If you've got a purchasing card program, perhaps to take care of what petty cash handles, but think about your strategy. And, then those other couple things, utilize what your bank has. We've talked about the positive pay, but when it comes to ACH as well, that can be an option. Blocks filters. If you're not going to ever get an ACH debit from a certain vendor, well, then set up the relationship so you've got an account that won't allow an ACH debit. So you have to really be strategic, looking at all your different bank accounts, how vendors pay you, or rather how you pay other vendors, and then set up the right controls so there's not even the possibility of them doing something like an ACH debit. All right, more actions to take, not the AP-centric ones, but things that you might be able to do in conjunction with HR. And then I'll wind up here, Sam, in just 1 minute in case there are a couple questions. We've got just the whole notion of background checks. I know from that ACFE report to the nations, 43% of victim organizations didn't run a background check on an employee prior to hiring. And sometimes those companies still hire an employee when there's a red flag, or hire a person. You want to mandate that everyone in accounts payable takes at least 5 consecutive days off in a row. That's to help get at things that they might be doing that won't get caught unless someone else is doing that employee's job for, say, a week's time when the person's away. You do want accounts payable to get notice of employee status changes. You want to do things like running vendor data against employee data, like the addresses, to see if a vendor address matches an employee's address, an obvious red flag there. So there is just so much you can be doing. The tip lines, anonymous tip lines, we know that through like the ACFE report, that's one of the number one ways fraud is detected internally, because employees can report things. And then audits. And specifically, this leads to one of my last points here about training your employees, obviously. And then testing is that audit element. Can you test the controls? Can you impersonate, do like a vendor impersonation thing through audit and see if an employee falls for it? So you can sort of set up fake frauds and just try the phishing tactics, try those other things and see, if employees are doing what they're supposed to be doing, and repeat that often. So it's not just about testing an employee's knowledge after you've trained them. The audits should try to mimic what they could encounter on the job, just to see, are they following what you say they're supposed to follow. And then lastly, just learn from other organizations' experiences. And this is what I mean by just sharing examples, having your employees find examples that you bring into department meetings, and you talk about what happened in other companies. And then I figure out, could this happen to us? What allowed it to happen? Do we have the right controls? And I think that can go a long ways. And then it's not getting personal. You're showing what happened elsewhere, and you're using it as a catalyst for change. So here I've got some different resources to explore, including things I have mentioned on the webinar. And I think, Sam, you want to do that? Yep.
We'll launch one final question.
Okay. And I realize I just bumped up against the hour. So thank you all for being with me or staying with us.
Great. And then after this, we did have some questions sprinkle in, so we'll get those answered in
Okay.
just a couple seconds here.
Okay. And I apologize for just going a little bit over on the time. This was a topic where I know that it's impossible to cover in an hour, but take all those little bullet points, those nuggets, and just see how they apply to your organizations.
Awesome. We're good to move on to the next slide.
Okay.
Great.
Whoops, I got to close that and we'll go there. All right, just a thank you from me. And if you need to contact me, I'd be happy to share anything that you might want to talk about further. So.
Awesome. And then quickly, we did have two questions come in.
Okay.
This one is, how often would you recommend vendor files be purged?
If you have a process to keep it cleaned like every year, I think that would be good. Again, it depends on how often you experience changes, but I would at least do it annually versus waiting for maybe every 8 to 10 years when you're doing a system upgrade.
Great. Then the final question before we wrap up here is, if an organization cannot move away from physical checks, are there types of check stock or envelopes or sealing methods that are recommended over others?
That's a great question. I would bring that to your bank, because maybe you can be doing more like the electronic, it's like that Check 21 initiative from years back. There might be other things, you can be doing. But if you're keeping check stock on hand, this is where you've got to keep it locked up. You probably want dual approvals, before checks just go out the door. There are a lot of different avenues to explore. And Sam, in the interest of time, I can always follow up with some additional tips that you could send out to the audience.
Great.
But it's good to start with your bank here too. But I would just get away from checks if you can, but I realize it's not always possible.
Perfect. Awesome. Well, thank you everyone for attending today. Thank you again, Lynn, for that incredible presentation. And if you're interested in learning more about what's going on at MHC, you can register for our monthly newsletter. That way you can stay in the know when we have upcoming webinars and interesting thought leadership content like our webinar today with Lynn. So thanks again and for hanging with us just past the hour here. So
thank you.
Everyone have a great day.